Welcome back to Alpha Recap, your quick after-hours market rundown from stockalpha.ai. Markets closed on Friday with a pretty notable risk-off tone, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature to ask us directly.
Thanks for having me. Happy to walk through what moved markets on Friday and what we're watching heading into Monday.
So, what really stands out here is oil and geopolitics at the top of the story, right?
Exactly. The headline driver was rising tensions between the U.S. and Iran, and oil popped above $100 a barrel. That spike was the clearest market level catalyst on Friday, and it pushed risk assets lower into the long weekend.
I mean, when you step back and look at this, oil above $100 changes a few things quickly.
It does. Higher oil feeds through to input costs for lots of companies. It squeezes margins for growth firms that expected lower energy costs, and it raises inflation risk, which in turn can lift treasury yields and pressure equities. And commentary from high-profile market voices amplified it. When someone with a big following ties market weakness to a single catalyst, it often sharpens short-term flows.
Right. And the other thing is that tech was under pressure on the same day.
Yeah, that tracks. Strategists were comparing the pullback in U.S. tech to late-stage dot-com dynamics, pointing to valuation stretch and concentration risk among the largest growth names.
Which sounded ominous on Friday. Did we see large names actually get hit?
We saw broad weakness across growth and mid-cap momentum names. Cisco specifically finished the day down about 3%. It was called out as an example of how even dividend-oriented tech names weren't immune. Mid-caps like the ones mentioned in the briefs slipped in the afternoon session as risk appetite faded.
Not a great day for chip stocks and some of the momentum plays.
No, the dynamic was classic. Geopolitics pushed oil higher. Oil pushed inflation and rate worries higher. And that fed into risk-off flows across tech and mid-caps.
Okay, shifting gears. The tape was really bifurcated on Friday because while large tech names pulled back, penny stocks exploded. Walk us through that.
Sure. There were huge single-session moves in several micro and small-cap names, and the volumes told the story. These moves were clearly retail and momentum-driven rather than quiet, fundamental re-ratings.
Tell us the biggest movers.
SST surged about 147% to $3.39 on volume of about 87.9 million shares. IZM jumped about 95% to 88 cents on volume of about 92.8 million shares. FCHL rose about 107% to $3.55 on volume of about 46.3 million shares. Then there were names like TBLAW, which jumped about 70% to a penny on only about 35,000 shares, and RMSGW, which plunged about 57% to 2 cents on volume near 42,000 shares.
Honestly, I was a bit surprised by this one.
It was extreme. When you see multi-tens of millions of shares trading in names at those prices, it's a signal that speculative capital is active and that intraday reversals and wide bid-ask spreads are likely.
So what's the typical playbook for listeners when they see that kind of activity over a weekend?
Check for catalysts and filings. These moves often follow press releases, SEC filings, or corporate actions, and sometimes they're meme-driven. Over the weekend and into Monday morning, look for company statements or regulatory disclosures that could explain or validate the move.
Right. Volume confirms attention, but not necessarily sustainability.
Exactly. Sustained heavy volume on Monday would be a necessary condition for durability, but it's not sufficient. Liquidity and news flow matter a lot with microcaps. Another cross-market data point Friday was a spike in mortgage rate searches on Google Trends. Searches for current mortgage rates jumped to about 20,000, up roughly 1,000%.
That's a huge jump. What does that tell us?
It suggests heightened retail attention to borrowing costs. If mortgage searches translate into higher application activity, that affects mortgage-backed security flows and can put regional banks and mortgage lenders under scrutiny. And if Treasury yields moved higher in response to inflation fears from oil, mortgage rates could tick up as well, tightening affordability.
So even a commodity move can ripple into consumer credit and housing.
Absolutely, these cross-asset linkages are what made Friday interesting. Oil, equities, credit, and retail behavior all feeding into one another.
Quick reactions, a few short ones to capture the mood.
Big move.
Wow.
Hold on, say that again?
Right. The bottom line from Friday's tape?
Geopolitics pushed oil above $100 a barrel. That fed a risk-off move into the weekend. Tech showed vulnerability due to valuation concentration, and retail-driven momentum produced outsized small-cap moves. Analysts noted the potential for a rotation toward energy and away from stretched growth, at least in the near term.
So what are the priority things to watch for Monday?
Number 1, oil price action, whether it held above $100 or retreated. Number 2, any de-escalation or new headlines on U.S. Iran tensions. Number 3, how tech leaders and midcaps opened after Friday's session. Opening gaps would reveal whether the sell-off was extending or being bought. Number 4, follow-up filings for the penny stock movers. And number 5, Treasury yields and mortgage rate quotes relative to that spike in consumer search interest.
Got it. Anything else we should flag before we wrap?
One more pattern to watch: elevated cross-asset volatility. When commodity-driven headlines move fast, growth and mid-cap volatility tends to increase, and correlations between big caps and small caps can break down. That matters for traders and risk managers as they set exposures.
Thanks. Quick recap. 3 takeaways for listeners.
First, Friday's sell-off was driven by oil and geopolitics, and oil topping $100 a barrel was the key catalyst. Second, tech showed valuation and concentration risk, which amplified downside in growth and mid-caps. Third, speculative retail flows produced extreme small-cap moves backed by heavy volume, so check filings and Monday volume for signals on durability.
Perfect. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
And remember, this is informational only. Analysts note the risk was elevated on Friday and conditions can change quickly. We're not offering personalized advice, just context to help listeners understand the tape.
Thanks, James. That's it for this Alpha Recap. Have a good weekend, and we'll see you back on Monday.